Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is Thursday, the 11th of November. Hope you are doing well. We are seeing a huge sell-off in the bond market today. Consumer Price Index came in this morning at 6.2%. You have to go back to the early 90s, like 1991, in order to find a measurement that hot of consumer inflation. Everybody's feeling it out there. It's the one thing that everybody is talking about is how much prices are increasing across the board. Of course, back then, it was the invasion of Kuwait and the prospect of higher fuel prices that led to that CPI being so high, and it resolved fairly quickly when the conclusion of that war came about fairly quickly. This may be different this time. We see governmental policies that are being contributory towards that high number. When you have this level of deficit spending, that by and of itself is very inflationary and certainly the wrong medicine if you want to combat inflation. So this one may be with us for a while. You don't want to hold a fixed income security like a mortgage-backed security when you have the prospect of inflation eating up your returns over time. The only way that you get around that is the market adjusts by lowering those prices and raising the yield paid on those securities. And that's what we are seeing now. Market is making those corrections, and it does it in the form of weak auctions that lead to higher yields and lower prices. So as that happens, our rates are very much affected. They are tied to those market forces. You are seeing the national average from Mortgage News Daily that was released this morning at 3.19%. That does not have the totality of the market sell-off baked into it. I would suspect that by next week, we may be seeing that in the 3.25%, if not higher range, once these numbers start baking into that survey. We'd actually dipped a bit below 3%. We'd seen rates improve nicely over the last 3 weeks. That's come to a screeching halt with this morning's CPI number. In any event, I hope this information is helpful for you and for your clients. I would be encouraging them to lock as soon as they have a property identified so that they are not placing themselves at market risk during this escalating environment. Hope this is helpful for you and for your folks. You can reach me as always on my cell at 210-260-9660 or online at brycehomeloans.com. Stay blessed, stay safe, and we will bring you an update next week.